Alrighty, everybody. Well, it is 12 p.m. Eastern Standard Time, so we are going to go ahead and get started. My name is Hope Anderson. I am COO and Head of Client Success at Digifox, and I'm super excited to see all of you guys here today. Hopefully, we'll have a few more people joining in as the webinar gets rolling here. I'm super fortunate to be joined by our CEO and founder, Nicholas Merten, who's also the founder of one of the largest crypto YouTube channels in the world, Data Dash, with over 500,000 subscribers. So today we're going to be going a little bit over how to do your own research. It's a common phrase in the crypto world, and not a lot of people know exactly what that entirely means. I, for one, am super interested to hear what Nick has to say, because it's, like I said, it's thrown around a lot, and no one ever really explains how to actually do it. So, Nick, thanks for being here.
Oh, thanks for having me. And yeah, I'm really excited to dive into this because it'll help to give a little bit of understanding, and probably not everything, as we'll only have probably about 30 minutes to focus in on it, to talk about the kind of broad strokes of what I will look for in projects. And I want to make it very clear, everyone, that it's just my way of doing it. It's not the perfect way. So that being said, you guys might have your way of going about doing it and ways you can modify and tailor it to yourself as well.
For sure. And just a couple of quick things before I forget. We are going to be doing a live Q&A at the end, so you can ask Nick or myself any questions that you would like. But please put your questions in the Q&A box at the bottom of your screen. You should see a little box that says Q&A with a couple chat bubbles. That's where you're going to want to submit your questions. And you can submit them at any point throughout the webinar, and you'll be added to the queue for questions. So whoever puts their questions in first will be answering those in chronological order. So if you have a question right away, just put it in there so you can get yourself in the queue. And we will answer those questions at the end of the presentation. And then if anybody has any random banter that you want guys going to go back and forth, just use the chat. Don't put your questions in the normal chat, because then they could get lost and it's harder for us to keep track of them that way. So that was super quick. We are also recording this, so we can hopefully upload it to our YouTube channel later. So if you have to hop off earlier, or if anybody who's missed it and is watching it now online, welcome. But that's all I have for housekeeping. So I'll go ahead and let Nick take it away.
Awesome. I bet you guys might have noticed in between I had to put on my research jacket. It's time to dive into some research, guys. All right. So I want to go ahead today and really talk about two things. I'll go ahead and I'll share my screen here real quick. I'll need the sharing permissions, Hope. But basically in today's conversation, we'll talk about two main things. So I'll go through a document kind of describing how we actually go about doing research in the crypto space. And outside of this, we'll talk about like a real live example. So let me go ahead and I'll pull this up real quick. Screen. Very cool. All righty. So can you guys see my screen good?
Yep.
Very cool. Awesome. All right, guys. So as I talked about before, we're going to dive through kind of the broad scope, probably 80% of what I do, and I go through and doing due diligence on projects before I usually go about investing in them. And then outside of that as well, I'm also going to dive through an actual live example or a project that I was interested in that ended up meeting the cut. So again, and you guys can do with that as you will. It's just a project that I like and one of the key trends we'll talk about. All right, so we're going to use this document as our guide here. Go ahead and zoom in a little bit just to make sure you guys can read this well and that the quality comes through. So the first step we have to think about is we got to stay really high level. We have to do what's known as doing like a high level overview of the opportunities in front of us. Now, I want to go ahead and preface with one key point that is important to remind yourself of throughout the entire process. When you go to CoinMarketCap or CoinGecko or any of these coin websites, a little known metric that is growing by the day is how many cryptos are in circulation. 17,302 cryptos according to CoinMarketCap. There's even more than that out there that aren't tracked. So we're easily talking about, anywhere from 20 to 25,000 cryptocurrencies. That's a lot of cryptos, not to mention all the hubbub around NFTs and you name it. So the point I want to drive here is that in order to be efficient with your time and also respect your time as an individual and not have yourself led down the wrong path by something that seems quite flashy at the start, we need to first start off with a high level overview. We got to think about what I would first call discover trends. So we first need to understand the broad macro trends in the crypto space. For example, Bitcoin is aimed at being a store of value and pretty much nothing more than that. It's aimed at being this cryptocurrency as a limited supply. It can be used as maybe an alternative to gold. Whereas in the crypto space, when we're doing research, there's all types of different sectors. There are protocols like Ethereum or Solana or Avalanche that allow you to have smart contract applications. There's the metaverse, which is aiming to build these digital ecosystems where there is digital property and land and ways where we can interact with one another. There's the DeFi sector, players like Uniswap or Compound that allow you to make trades or earn interest in a decentralized way, sometimes without the need for another counterparty or participant. Enterprise blockchain, players that are going out and trying to help integrate blockchain technologies into enterprise solutions, et cetera. So what I would recommend is as you go through and are doing some due diligence and you're trying to learn about what these macro opportunities might be, you can find a lot of the umbrella categories here. For some of the leading ecosystems, major umbrella topics like DeFi, NFT, the metaverse. Those are probably the big ones, the big trends you could look at. But if you're curious about like what these things are, even though I can click through and find a list of DeFi tokens, maybe I want to learn what DeFi is at the end of the day. CoinMarketCap has a lot of great beginning resources to learn about what these trends mean by definition. And you can find all types of different articles tied towards these certain topics. So I can learn about the breaking news that's coming out of the space and just kind of start to get a feel for what's going on. If you're interested more in learning about the topics, though, I could, for example, look up, DeFi, and I can start to learn about some different topics related about it, like DeFi as a movement, right? And I can start to dive into all kinds of different things. And if there's ever a term I get stuck on, I can go to the glossary here. This is found, for those who may be interested, in the Learn section here, right? And you can go to Alexandria where they have some articles and topics, the glossary, and other types of resources. There's tons of free stuff out there, just like the webinar here, right? So there's a lot of great content to get started on without having to spend any money. Next up, understand your risk to reward profile. And this is another critical thing you have to do before you even think about putting a dime towards an investment. First off, you need to understand, the money that you're putting in and stuff like, is this money that I'm willing to lose, right? I think that's something with all investments. It should be, again, that you have that money put away for a rainy day. But for this money here, you have to understand what you're affording to put in, right? Now, with that, the more precise questions are, because you're probably at that point where you're like, okay, I want to invest some amount of capital. You have to ask, what market capitalization range will I consider investing in? Will I invest in something that is an absolutely new project that could be right now be valued at practically nothing, like maybe like a market cap of a couple $1 million? Or am I going to only invest in projects that are really established? Now, if you don't know what market cap means, there's a really good Investopedia article that talks about it. But basically speaking, market capitalization or market cap is a term that's used in the stock market. It's used in commodities like gold and silver. It's used especially in cryptocurrencies. What it does is it takes a measurement of the existing supply of something and multiplies it by the market price. So if I, for example, have created Nick coin, for example, right? My own self-made cryptocurrency. And there's 1 million coins in circulation out there. And the market price is $1. The market cap is $10 million, right? Sorry, if I apologize. If I said there was 1 million coins, it's 1 million. My apologies. I thought I said 10 million. But if I have 1 million coins in circulation, it's valued at $1. The total Nick coin as a whole is worth $1 million, right? In total market cap. So you have to figure out which range you would want to go with. I would say if you're a high risk individual, you're taking on any evaluation range and stuff and probably setting yourself at thresholds of like $1 billion. The more mid-risk tier, which I think is a lot more healthier and going to probably help you win out in the long term, is somewhere between like $1 billion, like I would say 500 million upwards and above. And then the really safe passive investor would only invest in like coins that are over $10 billion in market cap. A good way to kind of filter this and ask this question again is, will I invest only in the top 10 coins, the top 100 coins, or any coin, right? And the more you move to the right, the more you kind of move away from the 100 top 10 coins to any coin, you're going to get more riskier plays. You're going to have more scams. You're going to have more fraudulent kind of projects that are really just looking to take your money, right? Or sell you a pipe dream in a sense, right? All right. So we've done the first high level overview here. Now we go on to due diligence. So what we're going to go ahead and do is start the process of trying to find some projects out there on the market. So what we're going to do is generate a list. We're going to generate what effectively could be just a list in a Word doc, or we could do a spreadsheet here, which I would recommend. And we're going to go ahead and take the trends that we're interested in. That could be the metaverse, it could be NFTs, it could be DeFi, right? It could be enterprise protocols, right? No matter what trend, start to list out a variety of projects that you find through CoinMarketCap, through different types of media outlets or areas where you're getting these different types of projects that are coming your way. And along with that as well, again, diving into like resources where you can find those projects, that can be another topic in of itself. But going around like YouTube, different resources, finding different projects, communities like Reddit, et cetera, and listing out those projects, kind of, no bars back, just listing them out, labeling the trend, basic things like the website, and then even maybe like a resource like the white paper, which we'll talk about later. Now, once you've done this, I would say, again, like you don't want to flood yourself with a lot of projects, find at least 10 to 20 projects, and if they're not mentioned or discussed about in a couple different sources, that's already kind of one filter. But again, the big point here with the due diligence category is keep it very surface level. Don't waste too much time on one single project. Even if you find one you think you really like, come back to it later on. Again, because we're going to do that in the next step here, which is filter and eliminate. So in filter and eliminate, this is where we want to go ahead and take our 10 to 20 projects and knock it down to 5 or 10. And maybe even a little bit less than 10, even if you had 20 in total. Maybe you want to cut it down still to like your top 5 projects. So my tagline is to eliminate the bottom 50% at least. And how are we going to do this? Well, there's a lot of key criteria we can set that will help us to filter this through. It doesn't mean that if a project doesn't meet on one of these things, it's an absolute scam that you should avoid it. But the more things that check off here, the better. Okay. So we'll run through some of them. First off, one big thing that you should just go ahead and ask before you even fall in love with this big project that you're looking at or a rejected project is just see first if that coin is even available on an exchange or a DeFi protocol where you can actually go out and buy that coin. Because let's say, for example, I'm a US citizen. There's a lot of coins and tokens that aren't listed on exchanges that support US residents. It's just the reality of the world. There are some tokens that aren't available to me as a US citizen. So always ask that first. If it isn't, then you can go ahead in your spreadsheet and you can mark it as a pass, as a fail. My apologies. So next up here, we could also go on towards asking some key questions. Does the project have a white paper or explainer deck on its website? So I'll go ahead and start using a real example here. One of the projects that I ran into recently, and this is definitely more of one of the kind of high risk plays in my portfolio. It's not what makes up the majority of it. It's like just for perspective's sake, it's like 1% of my portfolio. Is a project called Crixivia, which is a metaverse game built on the Binance Smart Chain, right? You can see here, market cap, very small, right? But it's one of those projects that I really like. And I'll go ahead and read real time on some of these things here. For example, does the project have a white paper explainer deck on its website? So this is the actual website here. If we scroll up to the top, where it kind of runs through a little bit about the project and everything. It talks a little bit about how it was designed on Unity. It's powered by Binance Smart Chain. You can scroll down and see some details on the project. So already things were already ticking off the box. But most importantly, it's got a documentation page equivalent to a white paper. Most projects nowadays, instead of having a PDF white paper that you'd open up in your web browser or download, now they have these really nice sectioned off areas where they can update details as time progresses. But this allows you to start learning about everything around the project, learn about the token metrics, learning about the gameplay of the actual game, how the currencies play into it, the roadmap of the project, all kinds of things. And the more information you got there, the better of an idea you can get of the project. Another example would be Ethereum, one of the largest protocols. They have a similar format here where you can go through and learn about all the details of the Ethereum white paper and how Ethereum operates, okay? So next up, does the project have a GitHub or working product? This is another great filtering mechanism. Some people say, oh, you want to get in as early as before they have the project. I'd say, with all due respect, I think it's a very flawed mindset. You want to make sure that the project has proven to you that they stand out against the competition by what they've actually built. So for example, for Crixivia or KXA, which is the native token, I actually went through and I was like, okay, like, for me, when it comes to metaverse games, there's a lot of froth in the market. There's a lot of projects that have Very, very, very lightweight tech demos. If anything, they just have a white paper and some screenshots, or maybe they have a CGI rendered trailer of what the game will supposedly be about, right? That's not gameplay. I want to see gameplay of the project. And what's really cool is that if I actually go on their YouTube page, they've got real working gameplay. And for me, as a gamer who's keeping an eye on the metaverse area, this to me it looks like almost 100% like RuneScape, an old game I used to play back in the day. It's got different types. It's got an open world feel. You've got many players in the area vicinity. You can do different attacks and different types of objectives. You can see here they showed actual combat with one of the AI generated characters in the game. And you're playing with your friends, might be similar to World of Warcraft. For me, this is what I like to see. Tangibility, right? In a world that's not tangible, right? I want to see actual product development or see code contributions in GitHub, which is a code repo. So you can actually start to see some of the work that's being built. And people can critique that work as well. It doesn't mean that, again, if a project doesn't have a GitHub, it's bad, but it's a good thing to see. Either one of the two. Does the team's website focus on the token price? If so, this is usually a red flag. So this is not a good thing to see. It's just a checkbox item for us. Now, if they talk about it again, it's not an end all be all. Like one thing you'll find, for example, like some of you might have noticed in stuff for Crasiva, they mentioned how you can buy it on PancakeSwap or one of the other exchange listings. This is not what I mean by mentioning the price. What I mean more specifically is if the website is focusing on our token made a 5x return or something, or did X, Y, and Z, steer clear from it. They're not in it for the long term. And you can bet that they're trying to find people or investors, or more specifically speculators, to chase those kind of returns. And I promise you, even if you are a speculator, there's nothing wrong about that, so long as you do it in a smart way. Let's just say that there's a reason they're trying to kind of hook you in on that, right? Previous price action doesn't guarantee future returns. And outside of that, you should care more about this project not being something that could go up 2x in value over a week, but something that could really multiply many times over the next couple of months to a year, next couple of years as it grows adoption, right? Next up, does the website focus on providing guaranteed returns? Same thing. If so, usually a very big red flag. If it promises guaranteed returns of dollar amounts, like that you're going to be a millionaire or something, ignore that. Another thing as well that is highly debated about in the crypto space, but I think is actually one that's quite simple to answer. Some people would ask, does the team have anonymous founders, people who are on the team list contributing to the project? We don't know who they are, where they come from. For a lot of people, this is what would be seen as a red flag, but I hold a very neutral take. Some people are also very defensive of anonymous founders or like team members, right? My point to this, it would be this. If this is an anonymous founder or co-founder, contributor who is a time-tested contributor in the crypto space, you can see that they have good intentions. They've built many valuable things, and they're not here for short-term wins or screwing over the underlying community of a project. Then I have no problem with that, right? They're just as risky as someone who I know who has a face who's been, for example, doing really good in the world, and that might turn loose the other day, right? You see what I mean? Like, so at that point, an anonymous founder is just as equal as a real founder, so long as they've had a good track record. They've proven themselves over time. Again, anyone can turn bad at any moment. Anonymous founders, maybe there's more of a probability, but again, I take the benefit of the doubt. I like to see people's progress over time and what they've achieved. And the last two ones we're going to talk about is, does the project have an existing community and is it growing? So like, not only can we obviously learn about the team and its contributors. So this is an example for the previous point I talked about, a really nice diverse team that's mainly based out of France, from what it looks like for contributors to Crasiva. But outside of that as well, I want to see their communities growing on Telegram, Twitter, with any kind of protocol or ecosystem. Do they have users who are talking about it and excited about the ecosystem? Now, it is important to note one thing, guys, and it's something you've got to kind of get an eye for as you go throughout these channels and these different communities. You got to learn to spot inflated numbers and also bots. So for example, for Crasiva here, it's a pretty good amount of community members. This is something that is attainable in the crypto ecosystem, especially for people who are doing exactly what we're talking about here. They're doing due diligence, going through and checking it out. That being said, I really want to see here, like when I go through and talking in the community and stuff, that I'm getting organic responses, people coming back to me talking, and to see like, okay, there's actually a genuine community here with this project. But again, just seeing the numbers in the first place, that's a good sign, but filtering through and knowing how to spot fake traffic, like fake followers and stuff, because most projects will do it. It's not a bad thing. And I'll be honest, I think it's not needed. It doesn't help at all, but a lot of projects think it does, right? To make sure that, oh, we're not like only having 300 community members, right? So the point in case of it is that if it seems too overinflated and not organic, that's where you can start to have a red flag. I like projects that do it wholly organic. So, and last but not least is the number of token holders growing. So this is something that you would probably utilize a tool like Etherscan, or if you're buying a project like Crescivia, which is on the Binance Smart Chain, you would use a Binance Smart Chain Explorer, right? You'd use the Explorer for whatever network this token is on. You can you can actually find that information on CoinMarketCap. So if we type KXA, for example, we can find our token here, and we can even see here as well the contract where the token was deployed and Binance Smart Chain. So I'll click on that, and look at that. I'm already here on the chain stuff, and I can see the number of holders here. It used to be that on these explorers you could see the growth in the token holders, but on CoinMarketCap, in a lot of cases, they'll sometimes have a category here on this list of topics called holders. And it'll give you a metric in this case that'll showcase has it grown or is it declining over the last couple of days. I'm going to tell you guys something that's very important here. At the end of the day, a crypto project can be great, but if it doesn't have community, it's nothing. If it doesn't have people who are going out and buying the token and participating in the community and contributing, it's not going to increase in value, right? And I understand you guys are here to think about, how do I increase my portfolio value? It's a cold reality, if you will, about any given crypto or asset. If there are not people buying it, right? Like for example, Bitcoin's price is growing generally over time. But if people aren't there, believing in Bitcoin's value, using Bitcoin for its store value capabilities and its finite supply, if there weren't buyers, the price would go down, because the sellers would push it down, right? So again, that's with any market. That's with Apple stock. That's with the price of a home. Doesn't matter how much utility a home has. If people aren't willing to buy it, then it doesn't really have much value in the eye of the beholder. It's all about the market value. And if there's more demand for buyers coming into the market than those who want to sell it, okay? And one last thing I'd say again in this, which is probably a topic I didn't talk about today too much because it's more in depth, is token metrics. Making sure that a project has favorable token metrics, meaning that the early stage investors have long-term lockups, meaning that they can't sell their tokens 1 month into the project going public and being traded by everyday people. And outside of that as well, the team has a long-term lockup. That's another important thing as well. But again, that's a whole other topic in of itself. All right, guys, we're getting close here towards the end of the actual presentation, and we'll dive into some Q&A. The last point here is, now that we've cut through and eliminated 50% of the projects that would have been on our list here, right? We've gone through and marked them as pass or fail, right? At least at a minimum, cutting 50% out. We then go on to diving deep into the project, learning about the in-depths of the projects remaining on the list. So what are some ways we can do this? Well, it's pretty self-explanatory, guys. There's no secret sauce to it. It is, after we've gone through filtering out a lot of the noise, now we go out and do what all of us can do at the end of the day. We go out there and conduct a proper reading and understanding, get a good grasp of an understanding of the white paper or the documentation. So in the case of Crescivia, right, it would be like, for example, diving back here into the resources they have here, knowing the ins and outs of the game, to really figure out, okay, is this something I want to invest in or support or play a part in? Learning about the background of the team as well, going through and seeing like, hey, have they, trying to see if you can find some of them on LinkedIn or other resources. Have they contributed to gaming projects before? Also, as well, as we were talking about earlier, watching gameplay. And I think another good thing as well on top of that, if I get the link, I know I have it up. I brought it up here. Let me see if I can get it here real quick. It's the dev blog. Yeah, this is it right here. So for example, like frequent updates, right? And like reading through those updates and seeing the progress of how things are done, not just looking at a roadmap, but seeing how they actually like have been building things and how they're documenting it. So they show like actual gameplay, different types of details and stuff. Again, this is what 95% 5% of metaverse projects are not doing. And this to me is again an instant giveaway that like, wow, these guys are really passionate about what they do. They love what they're building. And again, it's not like incredibly fancy graphics, but that's not really what sells the game. What sells the game is having a fun game to play, having functionality in the game, being able to build that community, right? So being able to watch YouTube videos, interviews and reviews with the team, things like that. And last but not least, ask questions in the community Telegram Discord channels. Just like how we highlighted the point up here about checking the exchange or keeping it surface level during due diligence and generating that list, this is a dead giveaway, okay? Now, the reason why this is a really important thing to do, if you have any outstanding questions, it's not just a way you can get your questions answered, but outside of that as well, it's a great way to really see like, hey, do the users in this community, like let's say, for example, Crescivia, which is a game in this case, right? Do they know about the in-depths of the project more than I do? The people who've been here, are they passionate about it just as much as I'm starting to get passionate about it? And that'll show you not only that there's an organic community there, which is a great sign of a scaling project, but outside of that as well, I don't want you guys to, be rude or anything like that. Always be respectful and kind to people. I've always believed that throughout my life. Be as kind as you can, wherever it makes sense. But one big thing that I would want to emphasize here about this is, you're putting your money into supporting a project by investing in it, right? If you're buying a token or crypto, you're putting your hard-earned money there. Make sure that the team, the community, everything around it works hard to encourage, like more than anything, get you interested, not just tell you that, oh, it's going to do this and that, but really like answer your questions about the fundamentals and how it's growing and this and that. Kind of take a Shark Tank mentality, like, any questions that you have and stuff, feel free to ask them. You won't always get a response, but between the community, moderators or ambassadors of the project, the team, again, you should be able to find those resources and stuff in that active community. All right, so the last thing here that we have to answer, we've gone through all our due diligence here. I've tried to wrap it up in a concise way. The question here is, should I buy, keep an eye on it, or ignore it? And that's again where when we come back to our list here, now that we've filtered down the 50%, now we can really start to type in, is this a pass? Are we going to invest in it? Is it something that, we'll forget about it? It's a fail in this case. It doesn't meet our requirements. It doesn't meet to our description. Or maybe a third option here, we would say, put it on hold. I'll come back to it a little while ago. I have a couple of concerns about it. I think this could definitely be a candidate, but I'm going to hold off for a little while, right? So again, you guys can create a sheet like this. It's meant to be simple. It doesn't have to be entirely complex. But again, that's really the final question. And then you ask yourself, okay, how much exposure do I want to the project? And I'll just go ahead and leave one tidbit of advice. No matter how much you, are more or less just tolerating a project just to have it in your portfolio, you think like it's good enough to meet the portfolio, or how much you love a project, you might find one that you just absolutely resonate with. Never put all your eggs in one basket, guys. I've had, for example, a variety of investments like this one, like KXA, for example, which is like 1.5% of my portfolio. And a lot of people would say, Nick, like you sound really passionate about it, you really like it. It's like, yeah, well, there's a very good chance that a lot like the other positions where I put 1% into it that I really, really liked, that it could go to nothing, right? And that's always true when it comes to investing. It's the same when you invest in a small, like a startup, for example, right? Or you invest in like a really small publicly traded company. You always have to assess the fact that it might fail. And here's the good news, that even if it's 1.5% of my portfolio, if it really scales out from this point on, I've got, with its market cap, I've got the growth potential for this to become a major holding in my portfolio. It could eventually become 20, 30, 40% of my portfolio, right? And so again, you don't need to have it be so small, but by filtering it down to this list of projects that we talked about, like 5 key projects, you might want to have good exposure to the safe plays like Bitcoin, Ethereum, and then have your quote unquote gems, your diamonds in the rough that could potentially become huge projects in the future. You do not want to overexpose yourself, because I've seen too many people get burnt speculating too much on small, like unestablished projects. But at the same time, if you do due diligence, if you follow these steps and you continue to learn from your mistakes and accept that, it's something to always improve upon, then you might just find yourself on the other end investing in the next big project. So Thank you guys so much for letting me ramble. I appreciate it.
Awesome. Thank you so much, Nick. This has been one of my favorite webinars to listen to.
Very cool.
It's been super cool. I like the step-by-step process. And again, like you can do this with any token. It doesn't have to be like a different process for any token. So that's kind of cool. Awesome. Cool. Well, we have some questions already right off the bat. So we'll just jump right in if you're ready with that. All right.
Absolutely. Let's do it.
Yeah. So Joseph says, thoughts on token metrics. I think he entered this right at the very beginning already.
Very good question. Yeah, that's something unfortunately we didn't talk about enough today, just for the sake of time. Token metrics is incredibly important. And I know I kind of talked a little bit about this earlier on when we were talking about like the eliminating bottom 50% or the filter and eliminate process. During this phase, when you're going through the white papers and documentation, if there's no document or details on the token, I usually put it on hold. It could be that everything checks off good, but I need to see those token metrics, because just like a traditionally publicly traded company, I'll give this as an example, because tokens are affected like this in the same way. Let's say I go out and I create a startup that claims to be the next big thing. It's going to do X, Y, or Z. It's going to do something, right? And we're going to solve some kind of market problem that can generate this much revenue, this and that. All these crypto projects, like a startup, they're early stage ventures. Mm-hmm. And if I were to, for example, in 6 months, receive all of my equity or all of the tokens that I'm owed for contributing to it, in just 6 months' time, it's not a very long time horizon. You might even question yourself, like, does Nick really have a stake in it, right? Does he really believe in this long term? And that's the ultimate question, is like, how long are the basically the vesting periods for the founders of the team, for the investors. The investors coming on board, if they want to get out of the project in 3 months, right? Like if that means they can get their tokens and start selling it, that's going to kill the token price. It's just the reality of it. Whereas a VC who's willing to put it in there for the next 4 or 5 years,
right?
It's actually like they're in it, you know, so they have a monetary obligation for this to succeed long term. So anyways, that's something that's important to know about.
Yeah, that makes a lot of sense. Potentially we could do a second webinar, like part 2, how to look at token metrics.
Yeah, exactly. Yeah.
Because that's kind of like the next, I guess, like deeper level of do your own research.
You have to build an eye for it. It's know about the like 2 to 3 things to look out for. And also you can start to learn about like seeing which VCs, like if they publish this information, like which venture capitalists or investors supported those early rounds. And there are some that are better than others, you know, and just again, making sure, you know, that those people are on board as much as you are as a community member. So.
Awesome. Yeah, for sure. Cool. We'll go to the next one. Anonymous attendee says, how do you research most time effectively? So basically, I think what he's saying is, because he says less time consuming and be up to the date, most effective way with projects and the competition. So like basically, at what point do I say to myself, you're spending way too much time researching, right? You just have to do something. Or, oh, you don't spend nearly enough time doing your research. You know, like what's the balance?
Yeah, I mean, everyone's got a different range of free time that they can contribute in, and how much due diligence you do can really depend on like how important it is to you, like you know. But I'll say this: the more someone can focus on the filter and eliminate stages that we talked about earlier, like removing, like, you know, we have in the crypto space over 17, 20, 25,000 cryptocurrencies in the market. And the sooner you can start to filter out of those coins, which ones just even seem generally interesting, and then going on to the next step of like cutting out the ones that don't meet to those simple criteria, those things you should get right as a project, right? Like any good company would do, or any good project would do in the crypto space. Once you filter out those, then you can not only have a lot of time saved, but you don't have to sacrifice the proper due diligence time that helps you to find which ones really stick home and really make sense. You don't want to sacrifice that at all, because at that point, then you just start guessing, and you'd be better off just throwing darts at the wall and trying to guess them at that point. So yeah, I think the sooner you can filter down to the ones that you actually think are worth the time of spending, like, you know, an hour to 2 hours, maybe even a couple hours looking into, that's going to save you the most time. That's what I've learned in doing YouTube for the past couple of years in the crypto space.
Gotcha. So basically, the deeper you get into the process, the more you're going to want to be paying attention.
Exactly. Yeah. Yeah. Even if you find some that like when you're going through and listing all those projects, even if you find some like, oh, this looks really good, it's like, hey, be diligent about it, put it on the list. We'll come back to it later. And it's just that process of filtering makes things move so much quicker. Yeah.
Awesome. Mark says, how much weight should we give our gut instincts versus what we might be recommended in a Discord or other community that we're familiar with?
That's a great point. You know, I'm a big believer, like at the end of the day with investing, you can apply strategy, you can do everything, but at the end of the day, like conviction and your gut feeling is actually incredibly important. It's the only reason people ever make the first move into investing in crypto or the stock market or anything. Buying a home and stuff, any kind of investment. One thing I would say, I can't maybe give a percentage, but I would say that there's always an affordable way to trust your gut instinct. So I'll give an example with like the example we used earlier, the KXA token. KXA to me like looks like one of the really cool metaverse projects out there. Not many people, according to market cap, it's nowhere near Axie Infinity or other kind of players out there in the market. My gut instinct tells me after going through my filtering process and what I personally look for in a project, this looks like a winner. But I'm not putting all my eggs in one basket. I'm not putting everything into it. If you want to follow your gut instinct, and this goes for trading, it goes for anything, so long as it's a fraction of what you own, have at it, right? And I'll put it this way. There's a really cool book called 100 Baggers. And it's this idea of like finding investments that can go up 100x in value, not 100%, but 100x. And this is what VCs, venture capitalists do, which basically is they're putting 10,000, let's say they have $1 million, right? They're putting $10,000 into 100 different companies. And they know that 90% of them are going to fail, if not more, and possibly even more. But they know that the 5% to 10% that they invest in, the $50, $100K worth of investments they made in successful companies, the equity or the tokens or whatever they're getting for it is going to be worth so much more than the losses. So it'll cover up for all the loss trades or investments, and it's going to leave them with great returns, sizable returns. So that's the important thing to think about when you invest in stocks, when you invest in crypto, anything, is that so long as you're not like, the problem I've seen, and this goes to that point about chasing your gut feeling, some people find one they just fall in love with and they put it all in there, or someone told them to buy it and they're like, oh, I love it. And it may even go good for a while, but then there's a bear market or that trend dies and you're so falling in love with it. You're so overexposed. Oh, it's going to rebound. It's going to go back to those highs. And it just never does. And you lose everything. Maybe even more than your initial investment. And that's the problem, is being too overexposed in one thing. Some people say to stand by making big bets, but I'm a believer in making lots of bets, even in things that I might sometimes be against my gut on, that some people are saying is something I need to watch or be exposed to. Think about Dogecoin, right? Looking back on it, I would have laughed if someone told me I had to buy Dogecoin. Now I'm not laughing anymore. So that's another way. Sometimes to go against your gut is also a great thing, but like just having that fractional exposure helps to make sure you don't miss the opportunity.
Yeah, for sure. Cool. So that was a great question. We'll go to the next one. I'm kind of stuttering because I had something I was going to ask that I totally forgot. I'll probably remember it later. JP says, how do you navigate the geopolitical shifts in regards to projects? So let's say a project is based in China, where the government will shift between legality or illegality of the asset, or the US, where states are further defined, but the government could complicate that on the federal level.
That's a great question. I would say it's a bit of a difficult one to answer. If a project isn't distributed enough and doesn't have the entities or foundations established, and you can usually find this, it's usually for like very large protocols like Ethereum. but you can usually find on the website if they have like an entity in Switzerland or in Singapore or one of these jurisdictions. That's usually where they found their structure. And also sometimes they'll be in the Cayman Islands, they'll be in the British Virgin Islands. That doesn't mean that it's a scam or anything. It's just the legal entities that are favorable to establish these kind of projects that are usually very low maintenance. So you can just go out there and you can build your project, right? But I would say if a project is heavily dependent on like a jurisdiction that's not meant to be insulting, but one that's usually tied towards censorship or too much government overreach, I'd say like China is one. I'd say China's probably the big one, like to be worried about. But outside of China, if you're talking about Europe, if you're talking about the United States, Canada, even I would even say as well Latin America and Southeast Asia, they're all very safe jurisdictions. I would want a team though that's global, especially as the scale of the project expands. Like with KXA, we talked about earlier, that's just a French team of game developers, and I don't see much risk there. At the same time, would it be kind of nice if they were distributed across the world and maybe had some other jurisdictions? Sure, that would be good. So they don't have too much interdependency on one group of people or one jurisdiction.
Gotcha. Cool. Joseph says, should I participate in pre-sales with limited capital of no more than 15K? And then for those of us who don't know what pre-sales is, could you quick define that?
Sure. Yeah. So like a pre-sale and a public sale are equivalent to like private investments and stuff in like a company. So for example, if you're doing like a pre-sale, this would be like, let's say for example, you need to like raise some amount of money before your token goes live. So it's like, basically to make sure that you can sustain the project. Let's say I want to raise $1 million. $200,000 will be in the pre-sale. So this is for like strategic investors or VCs, people who are going to write like, a couple $1,000 checks, and they're going to provide some kind of value. And then for the public sale, just for context, it's usually going to be at a higher price, but it's probably more open to the public before the token lists. So it's still early stages. Now, in the sense of should you invest in them or not, I can't give direct financial advice on whether or not you should participate in it or not. Just like everything we talked about, it's just my thoughts. But look, if you're outside of the United States in a general jurisdiction, like where you have the capabilities to do that, or you're accredited, right? Then yeah, I would say that definitely if you have the opportunity to and stuff, and you have that long-term mindset and it meets your criteria, I don't see why not, because it's generally going to be that the price will be higher on the public markets once it's live and stuff versus when it's during the pre-sale. And it's purposefully done that way because the private sale has time locks, meaning that like, you have to have a long time horizon. Now, some projects don't do that, and that's really bad. If it is, on the other hand, something where the private sale and you match to this like desired time scale, like, hey, like it's 4 years until all my tokens unlock, I'm fine by that because I love what this project's going to do. I think in 10 years time, this is going to be the biggest game in the metaverse space, or I think this is going to be the biggest blockchain protocol, right? Whatever it is, right? Just know the restrictions that come with it. But yeah, I mean, like being able to get something at a discount is a great thing. So.
Cool. Yetel says, this is a really good question. How do you balance the opinion of different opinion leaders, even like yourself? Because while doing research, many of the people on YouTube contradict each other. So while we don't know who has more knowledge about a certain topic than the other.
That's a great point. Yeah. So, as a YouTuber like myself, like I'm not perfect by any regard. I would never take anyone's opinion at face value and stuff. Like it's good to watch other content creators. I kind of take people's thoughts and I take it with a grain of salt, and I have a lot of grains now, and then I get a pile of what the general idea of things are. I'll put it this way. If I see someone, for example, who is like you can generally tell when someone's a knowledge expert in their field. So for me, for example, even though I spent a lot of time talking about the metaverse today, I'm not an absolute expert on the metaverse. I'm still diving through it. I will say that I am almost an expert at this point about understanding the gaming world, playing games all my life. So that's why I feel like I could talk about that. My area of expertise is something like decentralized finance or DeFi. And that's why when NFTs blew up, I'm like, look, I'm sorry, I can't touch that because I just don't know enough about it, or at least I wouldn't talk about it because I'm not a thought leader. People who want to tell you left and right about every single thing and that they know everything about it and they don't admit when they don't know about it, I would ignore those people. It's more important to figure out how to filter out people who they talk the talk too much, but they can't really walk the walk. That goes for traders. It goes for investors. There's a lot of people who will tell you that, yeah, I'm living the millionaire life and everything and this and that. But I think that the way I always think about it is that there's people who write those self-help books or like how to become the millionaire books, and they never actually founded a startup or they never did anything that most millionaires and billionaires do. They just got there by teaching people, writing books, right? So yeah, I don't, maybe that doesn't answer the question very well, but I would say to never take one opinion with absolute confidence, even my own. Like, listen to what I have to say, and if you find someone out there who contradicts it, who makes the better case, right? That's why I'm a big believer in like free speech and being able to debate things, being able to make a case for things, so you can go through the roots of arguments and where they can go. Like, I hold this side to something, he holds another side to it. Who can make the better case? And if I bring up these reasons and they can critique those and I can critique theirs, like, it can sometimes be an endless journey. But as we mentioned earlier, sometimes you got to go with your gut at the end of it all. But
yeah, and it can be really interesting to watch the back and forth too. And you might even learn more from looking at that. But that's kind of the point. Like, in answer to this question, I think kind of the point of the content we covered is, in the end, you're going to have to do your own research.
Yeah, there's no one out there who can tell you the end. And that's the thing. As a YouTuber, I sometimes see people say, "Oh, like Nick, like you told me to buy something," and it's like, well, I'll never tell people to like buy something. That's for sure. There's no video where I'm like, "You got to go out there and buy this," right? But outside of that as well, like everyone's human. Like we're all like. It would be like your friend, like if you told your friend, yeah, I'm a believer in this quarterback, I have him on my fantasy team, and then your friend puts it on their fantasy team and he does poorly during the season. Is that your fault? No. If everyone jumped off a bridge, would you do it too? It's like you gotta be able to use your street smarts and also take responsibility for your wins, as people usually do, but also for your losses as well.
For sure. JP says, and this was a question that I was going to ask too, was all the resources that you had up on the screen, if you could give me those links, DM those to me, and then I can put them in the description of this video when we upload it. So if you're watching this online, all the links that Nick showed in the webinar should be in the description below so that you can access those resources. But JP wants to know if you have any recommended readings besides what you showed. That you like read on a regular basis to like do your research?
So like like a certain websites or where you can get like blogs and like YouTube videos. That's a good question. Man, I would really have to. That's the thing for me, and it's something that we didn't talk about today, but like on the initial stages we talked about due diligence and generating your list. I mean, there's so many different channels you can go to. I would say there are some websites that are focused on like specifically covering like new projects coming out there. There are some like subreddits on Reddit that'll focus on it. But yeah, I have to be honest, I would probably say sometimes it's really going through the list on CoinMarketCap or CoinGecko and finding some of those projects. So you're not reliant on anyone like leading you down direction. That's another thing as well.
Gotcha. Yeah. Biased information.
Yeah, exactly. There sometimes can be like stuff like that. And the one thing as well, like I'll share with you guys as a YouTuber, I sometimes have sponsored pieces on my channel. If I have something that's sponsored, I believe that it's at least like it's met that threshold that it's a good quality project. It's something I would definitely look into. Doesn't mean that I'd invest in it or always use it, right? But the key thing is that there's a lot of unmentioned like sponsored material out there. And that's just something to be aware of, to know that someone might have like monetary incentives that they don't state and they oversell it. Yeah. So it's always important to look out for that.
Yeah, definitely. Just always be wary of like what people's intentions behind what the content that they post.
Exactly. Yeah.
Cool. We don't have any more specific questions from the community at this time. I had something I remembered what I was going to say before regarding like trusting your intuition, like potentially, how far can you trust your gut, essentially.
Hmm.
But eventually, that plays into the sunk cost fallacy, where you've gone so far that you don't want to get out because you're that far in. So I don't know if you've ever personally experienced the sunk cost feeling, or in your personal investments, and kind of how did you deal with that?
Yeah, I can say with that is when you experience the sunk cost fallacy, the one you're mentioning, Hope,
Mhm.
where like let's say for example, I've had some projects, for example, that I've held and I've seen go up in high multiples and I've gone down with them as well, right? That's something that I think everyone will experience in crypto because they usually fall in love with the project.
Mhm.
Um, my case in point that I would emphasize is that that happens a lot less often or becomes less of a problem or like a struggle in your mind if it's like a fraction of your portfolio. And it'll play both ways. So, for example, like with KXA, I'll mention my mindset with it. If KXA goes to zero tomorrow, I'm not stressing about it. Like,
Mhm.
and it's not because like I'm only just thinking for my own selfish ambitions, but it's like it's 1% of my portfolio. I
Gotcha.
can at my portfolio in crypto can go up 5% a day, right? So if KXA goes to zero, I'm not losing my house, I'm not losing my shirt. And on the same other side as well, which you're talking about, Hope, which is like if it goes up, right? Um, I would say all you really have to do is just know that, like, in keeping your mind, like, okay, so if I'm buying something like $100 million market cap, reasonably, maybe this could go, and this is how crazy crypto is. Maybe it could go to $1 billion, 10x, right? Um, Even though you think hopefully it's going to reach there, you got to be realistic and think, okay, maybe if it doubles, I take away 10, 20% of the profits, right?
Mhm.
Doesn't matter how much you love it. Doesn't matter, like you might believe, no, I'm going to set it and forget it, right? If you can't stomach it going really high up over the next like maybe year and then dropping 80% and then continuing climbing higher,
Yeah.
then you got to know how to take those profits and stuff. Learn from yourself, like on how you react to it. I've held projects that have gone up really high and dropped down 80% in value. And I'm like, I don't care because it was a fractional portion of my portfolio. And I know it could, or I'm not per se I know, but I'm highly confident it's going to climb up higher. And I'm not eager to trade it in the short term. So
Mhm. Yeah, and is it at some point though, there are some projects I'm assuming that get really like they're never coming back. And at one point, do
yeah.
you just give up and cut your losses, basically stop the bleeding?
That's a great point. So if it's something that makes up a large portion of your portfolio, like let's say for example, you've made like really great returns on it, I would just yeah, there's a couple different scenarios. So like if you're talking about like again, if it was just a fraction of your portfolio and maybe it
Mhm.
went up 2 or 3x in value, and you were investing in it with the mindset that this is going to go like 50x, like this is going to be like a really 10, 50x, right? So much higher, then I would say stomach it, let it go to zero. I know that sounds crazy, but so long as you've got enough distributed bets, and this is that kind of 100 bagger mentality, so
Mhm.
long as you have like 2 or 3 that do really good and you just let them sit there,
Mhm.
then that's the best because you can have projects again that do really high rallies, they correct. And then in 10 years, like even a year out, that high rally you remember gets circumvented by an even bigger one. And that's a great example of this in the metaverse is Axie Infinity. Axie Infinity is a project that was built during the bear market in 2018. No one was talking about it. It was like I think 10, 30, $40 million market cap cryptocurrency. It's now an $8 billion cryptocurrency. Maybe it's dropped a little bit now, but back during the metaverse hype that was back a couple months ago, it was the biggest kid on the block, and everyone was talking about it and it made crazy multiples in value.
Yeah.
And if you would have just sat and forgot about it, right? Not
Mhm.
worry about the short-term moves and stuff, you'd be loaded. It would have made up for any of your potential mistakes in the past. So it
Mhm.
depends. There's different trading philosophies, but if you're more of an active trader, have your take profit targets, and if it starts to go the other way, start having also as well what's known as stop losses. When like let's say you have a coin that's at $1, like you bought it at $1, it's coming to $3. As the price is moving higher, you set incremental stop losses that will take out some of your positions if price dips too much.
Gotcha. Yeah, that's a really good point. And one of our anonymous attendees has asked a question saying, along with this discussion, our exit strategy is something that you should define when buying, basically. So like so that you don't have to make an emotional decision. You already decided it beforehand.
That's a very good point. So again, and for the sake of time, this is like part of the 20% we didn't talk about and stuff. But it is actually, I probably should have included in the list, to be fair. It's something I natively think about, which is like your kind of mentality of it, right? Is this I expose myself 1% to this and it can go to zero, I don't care, or it's going to really like go up crazy multiples, and until it does so, I'm not going to take profit. Or, and I've got a 5-10 year horizon. Or B, exactly as you're mentioning, Hope, earlier, like, maybe I have, maybe I really only think this is going to do like a 5x in growth. Maybe it's already pretty established. Maybe, for example, like Ethereum. Ethereum's already a multi-$100 billion cryptocurrency. Could it go to like $1 trillion market cap? Yeah, it could possibly do that. Could it go to a $20 trillion market cap? Maybe over a much longer period of time, but probably not likely unless the dollar really loses value. So you got to be realistic about like, what is a project of this size and this value opportunity done in the past. And you're exactly right. Having those kind of plan in advance your take profit is really good.
For sure.
And one thing.
Oh, go ahead.
One thing I was just going to add to that, another thing you could do is, let's say, for example, another mentality to kind of meet in the middle between those two topics is, let's say I've got a lot of projects, maybe I've got like 5 or 10, like kind of 1% investments, they can go to zero, right? But let's say, for example, they do a 2 or 3x, right? And you want to maybe take some off the table. You can do that and then let the rest ride, right? And it could go to zero. You already made back. Even if it goes to zero, you made money still, right? There's strategies you can customize like that. But again, just an important thing is it can be really flexible depending on what your time preference is, what your risk profile is, et cetera.
Awesome. Cool. Well, this is going to be our last question, because then we're going to be at the top of the hour. So Yentl says, regarding diversifying your portfolio, investing with 1% of your portfolio might not be a very large scale or a very large absolute amount of money. What would you recommend in this view? Because 100% of $100 is $100, like, and basically 1% of that is $1. So like, that's not a very large chunk of your portfolio. So I feel like your strategy that you're talking about is a lot more applicable to this. I'm paraphrasing now off of his question. But it's more applicable, I feel like, to larger sums that you have available to invest. What is the strategy for like the smaller amount, so that if you only have a little bit of money to invest?
So that's the ironic thing about it, Hope, and I can understand where I won't even call it a misconception, but at least that thought process can come, right? Like, because it's like I'm putting in like let's say you have a $10,000 portfolio and I'm only putting $100 in that project, excluding network fees. That's a concern for sure. Money scale, like a percentage returns or multiples, like if I double or 10x or something like that, it scales with everyone, right? And there's a reason the large investors of the world, they're not trying to go all in on one project and really like bet their winnings, because if you can repeatedly throughout history, if let's say, for example, you've got 50% of your portfolio, and it's not financial advice, but if you have 50% in Bitcoin and Ethereum and like really established plays, maybe you have 25% in those kind of like mid-cap coins that are in between the $1 billion to $10 billion range that might be able to outpace Bitcoin and Ethereum. And then the other 25% you have in a basket of kind of small cap projects that are, again, those like 1-2% exposure, right? What's nice is that you not only have all the safety of those existing plays making up the majority of your portfolio, where even if the 25% that's all like the really speculative plays, if they all failed, you still keep your protection of your plays, your wealth. But outside of that, like for these smaller cap plays, your hope is that at least 1 to 5 of them will succeed. If you were to take the 25% divided into 25 different projects at 1% each, you hope that 3 or 5 of them will work. Because if those 3 to 5 projects work and they go up 10x, 20x, maybe even higher, which can happen in crypto, it doesn't always happen, while the other ones fail, you'll have made up your losses. And even that 3 to 5%, what was originally 3 to 5% of your portfolio, will in a couple of years' time basically triple or potentially 5x. My math is probably not 100% on board with the explanation, but basically those plays will now become huge chunks of your portfolio. And it'll basically, your original maybe $10,000 portfolio will now be worth tens of thousands, if not maybe hundreds of thousands off of those few key plays. And that's, again, it's the reason why venture capitalists who really know how to do, some of them know how to do the due diligence and know what's going to win out, but at the same time have that mentality of like, I'm going to scatter my investments and not try to place all of it on one bet. It'll make sure that you don't get caught, with effectively caught with your pants down, investing too much on one project, being too confident in yourself.
Yeah, for sure. Awesome. Thank you. I know I said the last question, but there's one more, and I thought it was a pretty good question. So if you're okay with going over 5 minutes. All right. So Joseph says, why do platforms like Cointelegraph pro-pick projects that usually do well? What, quote, other information do they have that average investors do not?
Yeah, Cointelegraph and CoinDesk, like a lot of the kind of like journalistic platforms in the crypto space, I think it's just that they're constantly doing due diligence. I wouldn't say Cointelegraph, and this isn't as any insult to them. I don't think they per se they're not like the absolute market experts to go to. So I wouldn't just say like, oh, if something's on Cointelegraph, I'm going to buy it, right? But Cointelegraph is probably talking about crypto, which in general is going to go up in value. If you're not buying like, and this is again a really important point here when we're talking about doing due diligence and trying to find that next big project. You don't always have to find that next big project. I understand, depending on where you are in life, and again, what your risk profile is. Maybe you're young and you can afford to lose all the money you have. I've been through that a couple of times when I lost huge chunks of my wealth trading back when I was younger. The case in point here is that if you just buy even established cryptos, which they're probably talking about, ones that are over like $1 billion market cap and everything, have community, they've probably gone through the same filtering mechanisms we've done, and they've gotten ones that probably don't have the same kind of growth potential as finding like a really small project. Cointelegraph just effectively won't talk about the really risky projects. And there's a reason for that, because a lot of them fail. Doesn't mean you can't invest in them though. You just got to have the proper filtering mechanisms and the proper investment strategy so that if that project goes to zero, you're not completely wrecked in your investment strategy. So not being entirely dependent on one project is the most important thing. But on your point about Cointelegraph, not trusting just one single source, but finding the quality sources that you find are consistent. If you find that Cointelegraph has been great, no matter what kind of projects they're talking about, but they're the projects they talk about do well, then that can be one of your sources used for due diligence. And we use them on the channel. Sometimes I'll reference a Cointelegraph or CoinDesk article.
Mm-hmm. Yeah, and I feel like there's a point to be made that it's their job to do a ton of research and diligence. So it's basically they get paid to do all this research. And most of us have day jobs where that's not like, you don't have 40 hours a week to do research on a specific project or point. So obviously their or maybe not obviously, but I mean their research, it's going to look like they have more resources to do their research off of when they honestly don't really have special resources. They just have more time.
Exactly.
So
outsourcing the work.
Yeah.
but again, I think that something like Cointelegraph, again, it's as we were talking about earlier, when you're diving deep, a Cointelegraph article, like a YouTube video, is a great thing to get more information, right? But it should always be you at the end of the day, so that at the end of it all, you can't say, hey, Cointelegraph told me to buy that. Cointelegraph doesn't have the ultimate answers to life. If someone did, then they would be retired and not be writing articles, right? Like we're all going through that journey and stuff, like trying to figure out what's going to work and what doesn't. And I think anyways, that's a very good question.
Very good question to end on. I'm assuming a lot of this research too is very much a muscle thing. It gets easier with time and whatnot. So like, I'm sure that from the beginning of your journey to now, it's a lot easier and quicker for you to do your research than it was in the beginning.
Yeah, that's another, like, again, part of the 20%. A lot of the work outside of what we talked about today is what you do afterwards. And it's really learning about the mistakes, not focusing extensively on like, oh, of course, I made this win and this was good. focus on your mistakes and look back and say, hey, okay, this project went to 0 or it dropped 90%. And like no matter how much I had exposed, this was obviously a losing trade or investment. What did I miss? What did this project have or not have that other winnings have had? And that it sounds really simple, but it takes some time to kind of look back and also be candid to yourself and say, you know what? I should have checked to see if they had a GitHub or some documentation. I should have, checked to see if their community was organic, but no, they just had high social numbers and stuff. Maybe they had a fancy website, but did they actually have a white paper detailing what they want to build? And did it make sense? Were people talking about themselves? Things like that.
Yeah. You're basically outlining a lot of what one of my mottos in life is learn how to do stuff from people who've done it before. And I feel like a lot of what the information you shared today is stuff you learned from experience, stuff that you learned from, oh, I wish I would have done that last time.
Learning it the hard way.
But then you share your knowledge with everybody else, which is really nice. And then other people do the same thing. Like, hey, I've been successful. Here's how I did it. And that helps people to be able to learn, because the best, people always say experience is the best teacher. I was always taught that other people's experience is the best teacher, because then you don't have to go through, I don't need to touch a hot stove to know it's hot if somebody else touched it first.
Exactly.
So
very good way to put it, Hope.
For sure. Cool. Well, we will go ahead and end it on those notes there, because we're about 6-7 minutes early or past the time. Thank you guys all so much for joining. If you had more questions that we weren't able to get to, or you weren't able to ask on this webinar, or if you're watching it online and you have some questions, feel free to message us in on our support chat, either in app or at digifox.finance, or you can tweet your questions to digifox_finance. And Eugene, who's our marketing specialist, will find those questions and we'll compile them, and he'll have a list of them, because we do Twitter spaces too sometimes. So if you're on Twitter, follow us on Twitter. We do frequent Twitter spaces where we have Ask Me Anythings with Nick or guest speakers on, and they're always a good time. We also have a podcast. So lots of different resources out there. We got a blog, a YouTube channel, which is probably where you'll end up watching this later. So basically, we got a lot of places where you can go and ask questions, and we'll document those for future topics. But until then, we will see you guys all in the next webinar. Have a great rest of your day. Thank you so much.
Take care, everyone. Thank you, Hope. Thank you, everyone, for attending.